wanted to give you, once again, create a quick film that would help with this idea of our accounting cycle and how we go through it. So let's look at, and once again, I found some pictures here for us to look at. So just a couple of things to notice about this general journal, right? And this is where we record all of those transactions, right? You notice we're even going to page number it, general journal page 1, right? Then you notice we put our year up here at the top, and you'll notice we don't keep putting the year in because we're going to assume it's the same year until we put a different year in there. And you also notice that we then put August 1st here, but you notice we don't even put August down here because, once again, we assume it's the same year, the same month, until we see a month change. Just, once again, not wrong, but you'll notice how we just do these tiny little things here, right? So then you'll notice, looks like we went out for borrowed some money. We borrowed $50,000 and we signed a formal note. When you sign a formal note, then it's called notes payable. Okay, if you just kind of like go and say, yeah, I'll pay you, then it's accounts payable. We borrowed $50,000. So you notice the cash is here. And then you'll also notice that the account that is getting the, oh, my arrow's doesn't seem to want to work for me. Hold on here. There we go. Then you notice the account that's getting the credit is indented just a bit. I keep giving you all the notes on this. That really does need to be indented. Okay? Then it looks like on August 3rd, we took some of that cash that we just borrowed, right? And we bought some equipment on the 3rd, and you notice it's purchased equipment. And of course, we would keep going through and putting all these journal entries in as we created transactions. Then, either once a week or at the end of the month, what we now need to do is we now need to put these into the ledger. So let's start with our cash account. And so let's say this is our cash ledger, and I know it's August now, right? So this is not the absolute snapshot. But first thing I need to do is on August 1st, I need to put the $50,000 cash we got, right? So I'm going to come down here, and I'm going to then hold on a second here, my computer seems to be pausing on us, isn't it? There we go. Hold on one second until I can get this going. Okay. So I'm going to come right down here, and I'm going to put in here the August 1st. Now, unfortunately, the years don't match up, right? You know, because once again, and then I would put that GJ1, that was the page number we found it, and we have that $50,000 that we borrowed, leaving us with a balance of, or giving us a balance of $76,300, right? Then I would come back over here to my journal entry, and I would actually put a check mark there saying journalized. Okay? And I'm going to keep going through and do all of my cashes because I've got that page open on my ledger. So now I need August 3rd, a $30,000 reduction, right? So I'm going to come back over here, and I'm just going to put in here, and I could just put the 3rd, but I'm going to try to be consistent with what this page looks like. August 3rd, 20X1. Once again, and that really should be sitting below it. I'm just not getting these lined up very well. There's that $30,000 amount, and now my balance is $46,300. Okay, so I've got that cash journalized, and I'm going to put my check mark there. Okay. I could actually even journalize this cash down here, but I'm not going to. You would, though. You would have to go through and put all your cash in there. Okay. Next one I want to show you, though, is let's just do this equipment for $30,000. So now I need to go to a different ledger page. And let's say this is the first time that I had bought equipment. Okay? This is the first time I've bought equipment. So I need to go to a different ledger page now. Hold on, I'm going to change the size of my font here. Go to a different ledger page, and I'm going to call this ledger, this equipment, right? I'm going to create a new one because this is the first time I bought equipment. And that was, what, August 3rd, right? I'd put that in there, and I might even put, hold on here a second. Put that there. And I might even put the name of the equipment, whatever it is, okay? Computers, if I want, right? Then it was, once again, on GJ1 is the journal page for that. And it was 30,000, and I definitely need to shrink my font to get this to fit in here. Hold on a second, my font much smaller, but as small as I'm going to be able to get it, but here we go, and 30,000. And it all really should be sitting right about there in the debit, and that gives us a debit balance of 30,000. Okay? And then, once again, I'd come back over here to my journal entry, and I'd put a check mark here. Okay? And once again, I would do that for all of these items. I need to do that for notes payable. I need to go to the notes payable ledger page and do that. I need to go to the vehicles ledger page. Once again, there's another notes payable that I borrowed, right? Okay, and I need to go to the cash ledgers page once again and do this one. And I would do this for all of my journal entries. And I would have all of these ledger pages. Okay, here's, a snapshot of my office equipment ledger page. There's my notes payable ledger page. I know the dollars don't match up. They're not, the same ones. There's my ledger page for accounts payable. There's my ledger page for unearned revenue or unearned fees. I have all of these different ledger pages. Okay? Back in the old days, you literally would have a book that looks like this, and you would open it up and you would flip one page, and each account would have its own page. When that page got filled up, you would stick another page in there, and the book would be one that you could open up and stick more pages in, and you literally would just flip through that. Okay, now it's all done by computers. I get that. Okay, but you have our ledger page. So now everything's journalized. Now it's time to proceed to our trial balance. So we create a spreadsheet. We can do this in Excel, right? We create a spreadsheet. We put all of our accounts, so we put page by page by page. We have a cash page, and we put cash, and it's got a debit balance, so we put that debit balance. I know the balances don't match what we were looking at, but let's say we wind up with $32,800, okay? Accounts receivable, and there's our balance. Okay, we have a prepaid rent page, but there's no balance on it yet, but we're going to put it in there anyway, just in case. Okay, you notice we left the balance open. And we would go page by page by page and put the balances in. Remember, this is unadjusted. We haven't done any of those adjusting entries yet. And now we have a trial balance. Okay? And we hope, if we've done everything correct, that our debits equal our credits at the bottom of the page. They do. Yay! Okay? We have our unadjusted trial balance. Now it's time to do those adjusting journal entries. Remember what we did in homework 3? We looked at our office supplies, and we had to adjust from the opening balance to the closing balance, and we came up with those adjusting entries, right? We did that for office supplies. We did that for unearned rent. Unearned revenue. We did that for prepaid insurance, and we did that for wages. Remember that? Well, those entries that we create, journal entries, would then reflect here. So let's say, remember the wage expense was, I think, $10,000, right? Well, let's just say in this scenario it's $250. So there's the $250. Remember, it was a debit in our homework to the wage expense, or salaries expense is what we actually called it in our homework. Same thing. Wages expense, salaries expense, same thing. Okay. So we had $500. We just did $250. So that journal entry, that adjusting journal entry that we did, let's say for our homework, would reflect a $10,000 number there. Okay. We'd have a $10,000 number right there. Okay. That would be where that $10,000 for that adjusting journal entry would be. Okay, I'm going to clear that out so it just doesn't confuse us. Okay, now you notice the other side of that was salaries payable that we did. Well, we didn't create a salaries payable account, but what we are creating here for this company, they decided to call it accrued expenses. Right? That's okay. And it's sitting in here. Why don't the numbers match? Because here's another accrued expense for $200 for utilities. They have a utilities bill, probably the power bill, that they haven't paid yet. So they owe $200 for that, $250 for wages, and that's where that $450 comes from. Okay? You notice here we have an adjustment to prepaid rent. Remember, all of those different ones. So all of those adjusting entries, in a sense, that we did for homework 3 would appear in this adjusting journal entries column. Okay? Then we add across. So you notice we started down here with $500 for wages expense. We have another $250, and it adds across to $750. We started with $200 in utilities expense, added another $200, and we wound up with $400. So everything gets added across, and we now have an adjusted trial balance after the adjusting entries. Once again, they should balance. They do. $189,750 and $189,750. We then are ready to start to create the financial statements. And so now we look at the accounts and we go, what are income statement accounts? And in this situation, it's everything from revenues down goes on our income statement. So those items wound up coming into the income statement 2 columns. You notice the 27.8 in those. Now, no. They don't balance at the bottom. We don't want them to balance at the bottom, okay? They don't balance at the bottom, and they're not supposed to. Okay, and we'll talk about that in just a second. Now you notice that everything above here went to the last 2 columns. Okay, the balance sheet. Statement of owner's equity. Those are 2 additional financial statements, and you notice they just go there. And once again, you notice these 2 do not balance either. That's okay. So now we come back over here and go, what do we need to make this balance? Okay? Well, we need another $12,950 in the debit column, right? That gets us to balance. So what does that represent? That's our net income. See why we didn't want it to balance? That's our net income, because here's our revenues, right? The $27,800 is our revenues, and all of these are our expenses. So how much is revenue greater than expenses? $12,950. That's our income. Add that, and now they balance at the bottom. But you notice we just added a debit, so we do need a credit somewhere. So we're going to take that and put it over here on the credits, and now look, these balance at the bottom now. Remember that step that you learned? You take all of your income statement items in the closing entries and you close them out to the income summary account, and then you take the income and expense summary account and you close it out to the equity account. Well, the amount that you're going to close from that income expense summary account into the owner's equity account in this situation would be that $12,950. So that's where it's going, and it's ultimately going to go here to the common stock line, the owner's equity account, for $12,950. That's what that is. That calculates it. So now we know when we now do our closing entries, we should have that $12,950 that goes to the equity account. So now we're ready to create the nice, pretty financial statements. Then we close the temporary accounts, i.e. the income statement accounts, and we close the owner's withdrawal. Now, this is called dividends. Why? Because when it's a corporation, it's called dividends and not owner's withdrawal specifically. But we close that out too. Remember, all of that gets closed through the income expense summary account, and then it goes there. So this would actually be then an additional $1,000 because of the dividends. Okay? Everything's closed out. We do a post-closing trial balance. Make sure that once again our debits and credits equal, and everything is all set. Hopefully this helped. If it confused you more, I apologize. But hopefully this sort of helped in the flow of the way things are. Always, once again, feel free to reach out. Look forward to seeing you in our office hours. Take care.